Hi there, folks. Sean Broderick. I'm here in Carlsbad. Investment U, great conference. And I always like talking to Rich Checkan. He's the president and CEO of Asset Strategies International. And he knows more about the gold market than just about anybody. He's really keeping his finger on the pulse. And so I was going to ask him to just give you the benefit of his observations of what's going on with gold. Could you please speak to my subscribers, Rich?
Absolutely, Sean. Love to. I think you're living in a hole if you don't know that gold has increased in value pretty considerably since hitting 6-7 year lows mid-December 2015.
Yeah.
At the end of the first quarter, we actually saw gold technically hit a bull market.
Yes, it did.
With a
Yeah.
20% increase. And I think the interesting part of this are a couple things. One, that prior years, we've seen a first quarter rally in precious metals, but it never materialized. It kind of fizzled out, stayed in range, and there was no more to be heard. This year, it seems like it's a little different. You know, from December until the end of the first quarter, I think mainly we saw institutional investment, central funds, central banks, hedge funds, etc. The retail investor really did not get into this market until the past month or so. And I think it's because they were gun shy from previous years. The difference now is we have a technical bull market by definition, and it's confirmed by a couple things. The first one is we've been talking about for over a year now, Sean, you and I, the gold-silver ratio.
Yeah.
We hit that magical 80 number and held it. We got to about 83, 84 ounces of silver to buy 1 ounce of gold. A few weeks ago, it lasted for about 3-4 weeks.
And just historically speaking, that's really high. You normally don't need that much silver to buy that much gold.
Absolutely. Traditionally, you're usually in the 35 to 50
Right.
to 1 range. So when you hit that point, it kind of signals that we've hit the bottom. Gold and silver should both start moving up. Silver's more volatile, it should outpace gold.
Right.
So that confirmation on top of the technical bull, and something else interesting this year that was missing in previous years is usually when you have a bull market in precious metals, you have the mining stocks leading the gold price. And that was absent the past few years. This year, best performing sectors in equities is the mining sector.
Actually, I have a great chart that I'm going to put up on this video from my presentation that I had on gold, which just shows the enormous move in the mining sector compared to both gold and the S&P 500. I mean, just leaving both of them in the dust. And also, we're just seeing a monthly breakout in the gold mining stocks that you just do not get very often. And as you said, that helps confirm what's going on.
Absolutely. So the net result is I think we're seeing a bit more clarity than we saw a year ago at Investment U. And for us, there's basically 3 things to do if you're looking at buying precious metals at coming off the bottom. You know, if your number 1 goal is insurance, for me, that is always gold. So that's where I would be pointing to coming off the bottom. Your insurance premiums are cheap right now. If your number 1 goal is profit, okay, to me that's silver. Because silver follows gold down and then goes deeper on the lows. And then when it turns around, it goes higher typically and outperforms on the upside.
It can really blast off, and we're just starting to see that happen.
Yeah, so you get greater profit potential. If that's your goal, silver's probably the play. If you're a trader, you're trading those gold coins, bars, etc. You're selling them, taking the proceeds and buying silver here. And when it gets back down to those more reasonable levels, then you're going ahead and selling your silver and trading it in for gold at that point.
Right.
For most folks, they're not traders. Let's be honest. So you're either looking at insurance or profit or a mix of the two. And you would skew it one way or the other if both are on your radar.
Well, actually, you just brought up a great point, is that things go up and things go down. And so in this thing, you really don't have to chase things, and you just have to set your targets, know what you would be comfortable paying, and the odds are that you might probably have a good chance to pay that, because this is a roller coaster. This is a roller coaster like none I've ever seen before. I mean, when I think about the end of last year and the kind of despair that I heard when I talked to miners and stuff, because a 4.5-year bear market will really crush the spark out of anybody. But then the way things have really turned around, it is amazing. It really is.
That's the boom and bust world of mining stocks. Right?
Yeah, so. Right. But also, when those cycles turn, things can really go up for a long time.
Absolutely agree. Now, the word of caution, that doesn't mean take all of your assets and put it into gold.
Of course not.
Nobody
It only should be a
recommends that.
small portion of your portfolio, just like Oxford Club tells you. But
Absolutely.
Yeah,
Absolutely.
okay, great. Well, thanks for speaking to my subscribers. Is there anything you want to add before we go?
No, just obviously we're a source if that's something you want to consider.
Asset Strategies International, they are very trustworthy. You guys have always been honest with me and like honest with everyone else, and I think people really appreciate that.
I appreciate that, Sean.
Okay, great. All right. Stay tuned, folks. I do, because I learn a lot when I speak to smart people like Rich. There's a lot of smart people here, and we're really getting a lot of good stuff out of it. Thanks for tuning in, and thanks for talking to him.
Thank you.